Okay, what's up, Tycoon? Super excited for today's video. We're going to be breaking down, what indicators that I use for day trading. I typically have this pulled up on the 5-minute chart, okay, using the VWAP, the 9 EMA, and the 21 EMA, along with the RSI, okay? I typically always have at least one screen, constantly, looking at the 5-minute chart with this setup. So if you want to know how to set your screen up exactly the way that I have mine so that you can use these indicators to help practice and, start learning and experiencing for yourself, make sure to watch to the end of the video, all right? Because I'll give you a walkthrough on how to set your screen up exactly the way that I have, okay? So we're going to start off, and the way we have it, okay, the purple line is the VWAP, the orange is our 21 EMA, and the yellow is our 9 EMA. Um, I like to call these directional and momentum EMAs because it's going to help provide some context to the candles, right? Let's say you're, not as experienced in reading the price action of these candles. This is going to help let you know the momentum, right? And kind of like the direction of where the stock is going to head or what the current trend is. All right. So if we look here when we opened, it signified that we were, in a little bit of a bullish uptrend as we had, the orange and the yellow above it. All right. And you see we had a nice little push. Okay. But for me, I like to look for an entry. All right. When I see a crossover of the orange through the purple. Okay. When we get our 21 EMA to cross the purple VWAP. All right. And then I'm going to look up at the price action of the candlesticks and I'm going to see what's going on here. All right. To know that you're in a large uptrend or a downtrend, right? The candles are going to be opening and closing above your yellow, orange, and purple lines here on the chart, okay? But for a strong uptrend or a strong downtrend, the candles are going to be opening and closing way above, your 9 EMA or below, right? Just depending on the trend. Well, looking here, we're seeing that it's constantly touching the 9 EMA, constantly touching. That doesn't signify a super strong uptrend to me, right? And we just got the crossover here. We look at the crossover candlestick, and it's a super wicky candlestick. Not really like the most bullish candlestick that you would ever see. We opened up here and then dropped all the way back below, and then came back up just barely above where that candlestick opened, right? So that's not a bullish entry sign for me. But what you can do is you can wait, be patient, and sure enough, it breaks down. We start dropping. Okay, we break the 9 EMA as support. We bounce off of the 21. We break that. There's a little bit of chop and we get rejected, right? So we went from finding support along our 9 EMA, okay, to now getting rejected on our 9 EMA. We drop, and then eventually on this big candlestick drop down here, we get the orange EMA crossover, right? So now we can tell that the direction is bearish. Okay, you have this first initial crossover of the yellow, the 9 EMA, and you see, hey, we're getting rejected here and we're falling lower. So now you're going to want to see the candles trading way outside of the yellow EMA, right? That signifies a strong downtrend. Okay, so you can see this candlestick forming and saying, hey, it's forming way outside of here. You can enter in on this candle, okay, or what you can do is you can wait for a re-entry off of your yellow EMA or the orange EMA. Okay, it just depends on your own personal risk strategy, right? But once we were signified that we're in a strong downtrend, and you see the candles opening and closing far, away from the yellow EMA. If you're not already in the move, what you can do is you can wait for it to come up and retest. And now these are going to be valid resistance areas, right? Where, you can expect it to hit here, get rejected, and drop lower. Okay. So, if you're trading option contracts, which is, one of the most lucrative ways, but it's a lot more risky, right? You can come in here and on the 5-minute chart, you can get 5, 10, 15-minute trades, right? That'll net you anywhere from 10 to 20 to 50%, just depending on, what options that it is that you're buying and stuff. So you can come up here and you see we get the nice rejection off of our orange EMA here. Okay, this is a 5-minute candlestick, another 5-minute candlestick in 10 minutes, right? Tesla went from 825, okay, all the way down to 818. All right, that's a 7-point move. If you're playing option contracts, and let's say you're up here buying the, right when it's right around 825, 826, and you get the 825 put options that expire, let's just say like weeklies, okay, and then they go 7 points in the money when you bought them a dollar out of the money. They went from having very little intrinsic value at all to being, $7 in the money and having much higher intrinsic value. So there's really, really, profitable, um, lots of good profits you can make using this strategy, okay? And it's mostly for day trades, okay? For quick scalps and day trades and just helping you see the overall momentum, right? Let's say you missed this overall big move down and you know that a pullback is due, right? And you missed this one. You're like, oh man, I knew I should have bought here off the orange EMA. And you see we getting some resistance here again. We try to open and close above it, but the next candlestick is a bearish engulfing, right? So now what you're seeing is a bearish engulfing candlestick, right? Where it's opening at this level and then closing, right? Engulfing this previous candlestick, and it's at your orange EMA. You can enter in here, okay? And again, you're entering at 826, right around the 826 level, okay? And you can ride that momentum all the way down to, 818, again, a 7 point move. All right, or you can keep, hold of the play because you just see the direction. You got up in here above the orange EMAs, and your stop loss would essentially be above the orange EMAs, right? You can get in, and potentially it could be reversing if it goes above them. But if not, you can just have faith in your play. As long as you're seeing it get rejected down here, you can keep holding and sell at your your price target. Again, if you got in here at 826 and you write it down to 814, or 813, right? Or 812, 811, these really low price levels, these are massive, massive gains that you're going to see when you're trading options, right? And these aren't very long trades. If you look from here, okay, to here, all right, this is 5, 10, 15, 20-minute candle, okay? Or if we look from here, all right, let's say down to these lows, okay? 5, 10, 15, 20 minutes, 40 minutes, 60 minutes, 1 hour. Okay, so you've been in the trade for 1 hour and you're down 5 pips in the money, okay? Or 5 points in the money. We keep heading lower, and in 1 hour and 20 minutes, now you're 12 points in the money on some Tesla put options that expire in the weekly. You're going to be up massively in profit, and that's something that a lot of people don't really realize, okay? So we went over the EMAs. Now the most important thing I think is going to be the RSI, okay? I love to look at the RSI, the relative strength index. It really helps me out a lot when spotting divergences, okay? Now, divergences are really tricky to play, but I'm going to show you how I play them and the way that I like to play them, okay? I like to look for a bullish divergence or a bearish divergence, and what that means is that the stock price, if we look at where this candlestick closed, okay, right here, this candlestick closed over here. Look at our RSI. We're bottoming out at 30. Okay, this is the oversold level on the RSI. All right, so we'll make the RSI a little bit bigger here, just so you guys can really grasp, the concept of the video, right? So, we'll start a trend line here. Okay, well, first, so here's our low. Okay, and speaking of the divergences, the divergence occurs when the price is making a low and then we're going lower. All right, look at the close of this candlestick specifically right here. It closed much lower than this candlestick. All right, so this is a low and a lower low. All right, it's an easy stock term to get familiar with and to start, again, familiar yourself with. All right, we come up here, all right, and we see that we actually have a higher low at this point. All right, so we have the divergence where we're making a low and a lower low. The divergence is where we're actually making higher lows on the RSI. RSI stands for relative strength index. So what we're seeing on the 5-minute chart here is the relative strength is actually increasing as the price of the stock is dropping lower, right? And this is a signal, right, that you could see some bullish momentum in the future, right? And what do you know? From those lows of 814, right? We consolidate. There's always 3 stages of a reversal. Okay, you have your downtrend, your consolidation, and then your uptrend. And look at that. There's a perfect reversal right here. And that's a nice bullish divergence opportunity. Okay, so even though we've been looking that, hey, we're in this massive downtrend, right? And we can tell using our directional EMAs, we're starting to see that, hey, we're consolidating and the price is going sideways, but the relative strength index is, going up. So we may see some bullishness, right? And that's why you saw the consolidation for the quick reversal. But this is only a 5-minute chart bullish divergence. It's not a 1 hour, it's not a daily chart. So it's not something that's going to propel you to a much higher level. But you could enter here on that initial moment when you saw that we created a lower low and closed and made a lower low, but actually made a higher low, right? And you look here at, and that's right around 813, 814, and then you can ride that back up to 820. That's a $6 move, right? Again, if you buy the 815 call options that expire weekly, all right, and then you ride that momentum up to $8.20. All right. Now you're $5 in the money when you bought those call options when they were out of the money. So, they went from having, very little intrinsic value at all to now being full of intrinsic value, being $5 in the money. So, the value of these things can really go up, tremendously, especially when you're trading call options or put options. But it's a very risky strategy. Okay. So you do have to be mindful. You do have to use, stop loss, risk management, is some of the most important things. All right. And it's much more than just having a stop loss or a trailing stop loss, right? It's about position sizing. Okay. If your portfolio is $1,000 or $10,000 or $100,000, all right, and you're looking to day trade, right, and you have a day trading account, you should not be putting anywhere from more than 10 to 15, at most 20% in any single trade, right? And 20% maybe if you're like super confident and you're getting in and out real quick, right? With a super tight stop loss, okay? But otherwise, you only want to put like 10% of these, right? Because again, when you're trading the option contracts, they're super volatile. If you're wrong, right, on one play, you could, if you don't have proper risk management, could lose 20, 30, 40% of your money if you just end up holding on to the contract because you don't have any sense of direction or anything like that, right? Like, let's say you bought this initial big dip down and you saw that the RSI hit 30 and that's approaching our oversold territory, and so you're expecting a big reversal, right? And you're just holding on to call options and we just keep going lower. You don't even see that we're riding the momentum EMAs downward. you know you have no plan. You're just holding call options for no reason, hoping that Tesla goes back up, and you end up just losing your money because it just goes back down. Versus, having a thesis on why to enter call options because, oh, hey, well, I'm seeing bullish divergence, right? Much more than just like, oh, hoping the RSI bounces and just starts a reversal. Right here, we're actually looking at bullish divergence, and it's on the 5-minute chart, so you know that it's not going to be an overextended bullish divergence that's going to last for like, you know, 5 hours or like a whole day, right? You can expect it to play out, in within the next hour. You can look for that bullish pop off the bullish divergence, and if you don't get it, then the move probably didn't happen, and we probably just kept riding the directional momentum EMAs downward. Okay, so hopefully this video makes sense. If you found any of this content useful, or really good information, let me know in the comments what your favorite part was. What questions you have further about it, right? I'm going to go ahead and pull up the study set and show you guys, all right, how I do it. Okay, so we on the price here, again, we have the 9 EMA, the 21 EMA, and the VWAP. Okay, so you just come in here and hit MOV, AVG, okay, for moving average, all right, and then click exponential, all right, and then you would hit add selected. That's going to bring it over here. You'll do that 2 times, and that will bring it over here twice, okay? Then you go and, do the same thing for the VWAP, okay, VWAP, all right, you come in here, hit add selected, and then same thing for the RSI. You hit RSI, come in here, hit add selected. All right, my specific settings for the RSI, the only thing really different, all right, is I go to the oversold and I put that in red. Okay, that's how I got this line down here in red. All right, overbought, I put that in green. All right, and then I just hit OK. All right, then we go to moving average exponential. We'll go to the settings here. All right, you're going to want to change the length to 21. All right, that's pretty much the only thing you need to change right here is the length 21. All right, and color to orange. All right, if you want to have it at the same color that I have, you can use whatever colors you want. All right, the VWAP. All right, the VWAP, what I have is the upper band, I have show plot taken off. All right, and I have the lower band show plot taken off. All right, I just have the main VWAP All right, I have the show plot on that one. Everything else is the same, including the show plot. That's how it comes. These are the only two that you need to change. All right, and the color is already that by default. All right, and then we'll go to the last moving average exponential. All right, our EMAs. All right, and we just come here, change the color to yellow, and you want to change the length to 9. Okay, so from the default settings to 9. All right, and you'll save all of these up here on the price side. All right, and you'll put the RSI on one of the lower tabs, so that way it's not on the same chart as the price. All right, you'll hit apply, and boom, you'll be set up, and your screen will look like this. And you can come in here and drag it and do whatever you want and start to use some of these strategies for yourself, in a paper trading account or something like that to start to practice. Okay, that's the best way to start off practicing. And then, once you see that you've become comfortable with a strategy that you like, and a strategy that works for you, then you can go ahead and, look to play it some more. All right. So, we went over a little bit of bullish divergence. We went over the EMAs. That we even had bearish divergence too. Okay, which could have been a signal to buy in on the top here and then ride that whole momentum for the day down. If we look here, we have a high, okay, and a higher high. We're creating higher highs. All right, we look at our 5-minute RSI here. We have a high, we have a lower high, and we just continue that overall downtrend. Right, that was our initial bearish divergence. And boom, we got that nice big break downwards. And then our directional EMAs took over and we just continued that downtrend for the rest of the day.